Have you ever wondered how secure our global economy really is? It's a question that seems to be on the minds of many as we navigate through the 21st century. Today, we're going to take a closer look at the economic decline that major economies around the world are experiencing. The factors contributing to this instability are numerous and complex. From political turmoil to environmental challenges and everything in between, we'll be exploring economies as diverse as those of the United States, China, the European Union, and emerging markets in Africa and South America. Each tells a unique story of struggle and resilience in the face of economic adversity. Join us as we delve into the shocking realities of our global economic decline. What if I told you that some of the world's biggest economies are on the brink of a decline? Let's delve into this. The powerhouse economies that we've all looked up to, the likes of the United States, China, Japan, and Germany, are showing signs of an unseen decline. Take the United States, for instance. Once the beacon of economic growth, it's now battling with a slowing GDP growth rate. In the last decade, the average annual GDP growth has dipped below 2%, a far cry from the robust growth rates of the past. Then there's China. This economic juggernaut, which boasted double-digit growth rates in the early 2000s, is now grappling with an economic slowdown. Its GDP growth has dropped to around 6%, the lowest it's been in nearly 3 decades. Let's not forget Japan and Germany. Japan, with its aging population and shrinking workforce, has witnessed stagnant growth. Meanwhile, Germany, the economic powerhouse of Europe, is dealing with weakening industrial production and declining exports, both of which have led to a sluggish GDP growth. So what's causing this decline? Well, it's not one single factor. It's a mix of global trade tensions, demographic changes, and internal economic issues. Trade wars, particularly between the United States and China, have disrupted global supply chains, affecting economies worldwide. Aging populations in countries like Japan and Germany are reducing the size of the workforce, thereby slowing economic growth. Internal economic issues, such as high levels of debt and income inequality, are also playing a part in this decline. These economies, once robust, are now struggling to maintain their previous growth rates. The decline of one economy can trigger a domino effect. But how does this happen exactly? Think of it this way. Economies around the world are not isolated entities. They are intricately interwoven, each one a thread in the vast tapestry of global commerce, trade, investment, and even political relations. Link us all together in a complex web of interdependence. When one economy falters, the repercussions are felt far and wide. A decline in one nation's economic health can ripple outwards, affecting its trade partners, its investors, and the global market at large. This cascading effect is often referred to as the domino effect. Now let's consider an example. Imagine a prominent exporting country experiencing an economic downturn. As their economy weakens, their ability to produce and export goods diminishes. The countries reliant on these imports may then face shortages, driving up prices and potentially leading to inflation. This could then trigger economic instability in these countries, causing the dominoes to fall one by one. Or consider the impact on investors. If a country's economy is in decline, investor confidence may waver. This could lead to a withdrawal of foreign investments, further exacerbating the economic decline and potentially causing a domino effect in other economies where these investors choose to pull out. The domino effect doesn't stop at national borders. It travels, it permeates, and it impacts. It's a fast-moving current in the ocean of global economics, able to change course and speed with little warning. As we navigate these turbulent waters, it's crucial to remember that every economy, no matter how large or small, plays a part in this grand scheme. Each domino is integral to the set, each thread vital to the tapestry. The domino effect in the global economy is a frightening reality we must face. And as we face it, we must strive to understand it, to predict it, and to mitigate its impacts wherever and whenever possible. Economic decline is not just about numbers in nitis, it's about people's lives. When we talk about economic decline, it's easy to get lost in the graphs, the percentages, the jargon. But we must never forget that each data point represents a human life, each downturn in the curve a ripple effect in the real world. Take unemployment, for instance. As economies falter, businesses struggle, and jobs are often the first casualty. It goes beyond simply losing a paycheck. It's about the dignity that comes with work, the security of knowing you can provide for your family. It's about the dreams and hopes of a career suddenly snuffed out. Then there's inflation, that silent thief. As economies decline, prices often rise while incomes stagnate or even decrease. Imagine going to the grocery store and finding that your money buys less and less each week. It's not just about tightening the belt. It's about the anxiety of not knowing if you can put food on the table. And let's not forget about the impact on our communities. Schools, libraries, parks, public services often face cuts as governments grapple with decreasing revenues. These are the places where we learn, where we come together, where we find joy. And their decline can feel like a blow to our very sense of community. Economic decline also takes a toll on our mental health. The stress of financial uncertainty, the feeling of helplessness. These can lead to anxiety, depression, even thoughts of suicide. It's a silent crisis that often goes unnoticed, but its impact is no less real. So the next time you hear about economic decline, look beyond the numbers. Think about the mother struggling to feed her children, the father who has lost his job, the young person whose dreams are on hold. Think about the communities crumbling, the mental health crises unfolding. Remember, the human cost of economic decline is immeasurable. So what does the future hold for our global economy? This is a question that has been on the minds of many, and rightly so. As we look ahead, the picture may seem bleak, but let's delve a little deeper. Predictions for the global economy are varied, but most economists agree that we are in for a period of slow growth. The world's major economies, once the powerhouses of the global financial system, are experiencing decline. This, coupled with increasing debt levels and political instability, paints a grim picture for the future. But it's not all doom and gloom. While the challenges are significant, they are not insurmountable. Economists propose a number of potential solutions and strategies to mitigate this decline. One of these is increasing economic diversification. By broadening the range of products and services that they offer, economies can become less reliant on a single sector and more resilient to shocks. Another proposed solution is boosting innovation and technological advancement. By investing in research and development, economies can foster the creation of new high-value sectors that drive growth. This not only generates wealth but also creates jobs, helping to offset some of the negative impacts of economic decline. Yet another strategy is improving education and skills training. A well-educated and skilled workforce is vital for economic growth. By investing in education, economies can ensure they have the human capital needed to drive innovation and diversification. Of course, these solutions won't be easy to implement, and they won't produce results overnight. They require concerted effort, cooperation, and above all, political will. But if we are to ensure a sustainable and prosperous future, they are steps we must be prepared to take. The future of our global economy is uncertain, but there is always room for change. And change, as we all know, is the only constant. So let's embrace it, and let's work together to shape a future that is not just economically robust, but also socially equitable and environmentally sustainable. Ecotocin. Let's summarize the shocking facts we've uncovered about the economic decline. The world's major economies are not just slowing down, they're experiencing a significant dip. This unseen decline has triggered a domino effect, rippling through markets and industries far and wide. The human impact is profound. Job losses, reduced wages, and increased poverty are just some of the harsh realities faced by millions. It's a bleak picture, but it's important to confront these truths head-on. And the future? Well, it's uncertain. Economies fluctuate. That's a given. But this level of decline is something we haven't seen in decades. As we ponder on these facts, let's remember that we are all part of the global economy. It's not just about the numbers, the graphs, or the fiscal reports. It's about people, communities, and nations. What actions can we take to secure a more stable economic future? The answer to this question will shape the world for generations to come.